Happy 2023. It's John Bathurst with Compass and the John Bathurst Group, and I'm here to share my weekly market update with y'all. Obviously, a lot has happened in the market over the last 6-8 months since the frenzy. The market has decelerated, even declined in some areas or flatlined. And I just wanted to share some great information. You see below, there's an article posted by Realtor.com that weighed in with many economists and real estate experts, and I just want to share a little bit of that information. You can read the full article on your own, but before we get to the South Bay numbers, I just want to share a little bit of information that I was reading up on. The headliner is the housing market in a bubble? How today compares with the Great Recession back in 2008. There are many comparable things that people are looking at, thinking that we're in a bubble and thinking that the end is near. And there's really a lot of indicators that maybe share things that might be a little bit different. Obviously we hit record highs in spring, probably peaked out in the April, maybe May timeframe as interest rates started to climb through spring of 2022 and hit kind of a new high in early summer and then continued to increase throughout the fall. It really created a slowing of the market, and there's some good news here to share. Jerome Powell, the Federal Reserve Chair, said that in COVID-19, the pandemic market had been in a housing bubble, had created a housing bubble. But really, it's more likely that the rising interest rates, the result of the Fed hiking its own rates to bring down inflation, that mostly directed and led to the real estate freeze or slowing down. In this market, there isn't subprime mortgages, wild speculation, or overbuilding happening. So really, there's not really a comparable when it comes to what happened in the Great Recession. I thought that was a great little excerpt right there. And there's really no formal definition of bubble, so people call it what they want, says Bill McBride, an economics blog writer at the Calculated Risk, who predicted the last housing bust. The real question is, what is going to happen? What do you think is going to happen? Do you think we are in store for a major downturn or a slight correction? My guess is that with a lack of home inventory out there, we're just looking at a sort of continued deceleration and maybe a slight correction, but not really a downturn in the market. There is no replay for the great housing bubble, says real estate and finance professor Susan Wachter of the Wharton School of University of Penn. And she's in a position to know. She's the co-author of The Great American Housing Bubble: What Went Wrong and How Can We Protect Ourselves in the Future. Mortgage rates have more than doubled since last March, so it's not surprising that the housing prices in many markets are falling and flatlining across the country, says Wachter. So I really agree with that. Listen, some affordability issues for many first-time home buyers or even move-up buyers, but I think that it's just actually helped decelerate the market and make things a little bit more normal. A couple of things I want to share in here. It's worth noting that the market is still, and home prices are still up considerably year over year. 11% higher in November than they were last year. Realtor.com forecasts that they'll go up another 5.4 nationally in 2023. There are other sources that think we'll be flat, maybe slightly down, but I don't think there's really any sources out there thinking that we're going to see a 10 or 20% dip in the market. We might see slight appreciation, we might see some flatlining, and maybe some slight deceleration. That's already happening in the South Bay, depending on the micro neighborhoods. There is some opportunity for buyers out there with price reductions. There's some opportunity with sellers on great streets or beautiful homes. So it's really sort of a mixed market there. Back in 2008 or before 2008, many people were buying homes they really couldn't afford with subprime mortgages. So I think that the lending market is much more stringent and not lending money to anybody with a pulse. That's a big difference that's happening today than it was back in the Great Recession. Economists say it's different this go around. Prices rose because there weren't enough homes for sale to meet the demand. And mortgage rates bottom out to record lows in the mid-twos range, making it possible for buyers to afford a much higher priced home as they weren't paying as much interest, so the prices climbed. The market is overvalued now. Prices have gotten way ahead of incomes, rents, and construction costs, says Mark Zandi, chief economist at Moody's Analytics. The market is now correcting. Over time, affordability will be restored, and the market will find its footing. I think we're kind of experiencing that right now. It's going to happen, the first change really starting about June, all the way through this year and the first part of the new year. But there's a lot of buyer activity out right now. I see a lot of buyers getting off the fence. Rates have dropped slightly, and you can get actually a pretty great jumbo mortgage for maybe as, at high 4s or low 5s, and a conforming loan, and definitely in the mid 5s. So there is, those are great rates. He anticipates prices will fall 10% nationally over the next 2.5 years. If there is recession, prices could nearly fall 20%, which sounds like a lot. The context is important. Home prices are up 39% since January 2020. So 39% basically in 3 years. So a slight correction, that's how the real estate cycle goes. Most economists don't anticipate another foreclosure crisis. There is very few foreclosures happening. Most homeowners have a lot of equity in their home. So if they have to sell because of a job loss or a change of lifestyle or change of something happening, more than likely they'll just go on the market and sell at market value. So foreclosures really probably are going to be very minimized. To speak forward, a few more things here. The demand plus falling into the 6% range might lead sales to pick up at least a little bit. As interest rates have climbed as much as 7%, and now we're seeing things in the low to mid 6s and even falling into the 5s. It is a very affordable and mortgage rate that actually can work for most. In fact, if you look at historicals, that's actually a really favorable rate. You can't really pay attention to the 2.5% which we once had earlier in the year because that was unheard of. That's not probably going to happen again. And congratulations to all the sellers and buyers out there who actually have those great rates. Hold on to those. The housing market shortage should help prop up the market. One key difference between then and now is the number of homes for sale. In the 2000s, there was a glut of housing with many more listings than there were buyers. During the pandemic, the opposite was true. There are many more buyers out there than homes that are available. 3 times as many existing homes for sale in the run-up to the housing crash of 2000 compared with today. According to the data, National Association of Realtors, in October of 2007, 3.9 million homes were on the market, compared to just 1.2 million as of late fall of 2022, 1/3 the available inventory. So a huge difference. We still are seeing in a slightly down market, buyer demand and very low inventory, which is really kind of a mixed market. It's their seller opportunity because of little competition, and there's buyer opportunity because realistic sellers or unrealistic sellers are actually not pricing the homes properly of what is really happening today. Obviously, when it comes to, again, like I said, the mortgage market, lending standards are tightened. You can't get a loan if you have a low credit score or you don't have the actual money to pay for the home. So again, that will actually help not lead to bad loans and foreclosures. But I do think that, we don't know what we don't know. So here's what I say to most of my clients, buyers, sellers, investors is, what are you looking to do and how urgent is it to do what you want to do? If you need to find a primary resident, let's go find it. If you don't have to downsize or upsize today, maybe it's favorable to wait. There are many different things going on in the market, so let's see what is the most appropriate thing for you to do in 2023. So let me just run through the South Bay numbers really quickly. And keep in mind, this data is from early December through early January, which is really the slowest period of the year. So the numbers might seem really small, but nonetheless, let's share. In Manhattan Beach, there was only 5 new listings that came to market in the last 30 days. Only 36 current active listings, 12 under contract and 13 have closed in the last 30 days. So the inventory is actually shrinking, but opportunity. 7 sold at price reductions, 3 sold over asking. The active homes on the market right now, 17 have seen price reductions, so there is a buyer opportunity right there. Hermosa Beach, 8 new active listings in the last 30 days, 29 active listings, 7 under contract and 15 have closed in the past 30 days. Again, that's 22 under contract and closed, with only 8 new ones coming to market. We need more inventory there. 7 closed with a price reduction, and 2 actually closed over asking. We have 8 homes on the market today that have price reductions, so that's about 27% of the market. Redondo Beach had 18 new listings come in the last 30 days, 64 active listings currently, 23 under contract and 30 have closed in the last 30 days. And 24 have price reductions. So that's about a third of the inventory actually have price reductions out there. Opportunity for buyers. Palos Verdes Estates, 7 new listings in the last 30 days. 14 have active listings, 5 under contract and 7 closed in the last 30. There are 5 homes on the market have price reductions of the 14. In Torrance, 47 new listings in the last 30 days, 91 active, 52 under contract and 57 closed in the past 30 days. So Torrance is flying along there. 37 of the homes on the market of the 91 have seen price reductions. And El Segundo, just 1 new active listing in the last 30 days. 13 active total, 2 under contract. We have actually seen 4 of those close with a price reduction, and 4 of them close actually over asking. And there's 5 price reductions right now in the current active inventory. But this news is not a lot different than I've been reporting over the last several weeks, is that if you're a buyer out there, interest rates have come down a little bit. There are some great loan products out there. And if you could afford the down payment, and if you can afford the monthly payment, and you're renting right now, now's a great opportunity. If rates fall a little bit more buyers are going to come into the market. And with such little inventory, it's going to be a bidding war out there again, even as the market has decelerated. So if we can find a great home for you today, and it's something you're looking to do in 2023 or even this spring, we should go after it. If it's an affordability situation where you just really can't afford to buy a home in a certain area, then maybe waiting a little bit longer or maybe buying in a different area is advisable. As a seller, listen, there's so little inventory on the market right now. As a seller, you may not get the prices from that we reached our peak back in spring, but those numbers were a little bit inflated. But I do think that when you look at the amount of appreciation we've seen, it was 39% over the last 3 years, that you've built tremendous equity in your home if you owned your home for at least 2 years. But if you are looking to make a change, either locally or out of the area, as a seller, you are in the driver's seat because there is not a lot of competition out there. Let's get together. Let's talk about what your short or long-term goals are. And if I could help you move and go to your next destination, I would love to. But nothing less than just having a great real estate conversation and keeping you as informed as you possibly can. And as always, I'm always here to help or answer any questions. You guys have a great week, and we'll talk to you soon. Cheers.